So the economy is doing fine in the US when you look at GDP numbers, not going into any contraction territory there. Inflation, CPI numbers coming down. The Fed told us that the labor market and the economy is looking fine as well and resilient. The Fed also, one Fed member did mention that they did not want a rate cut in this meeting. And we heard from Powell saying that there's less need of a chance of a rate cut in December, throwing cold water on the idea of a definite rate cut in December, and mainly on the idea that the last rate cut that we got that happened is just a risk management thing, and that the economy continues to be strong, resilient, and we continue to monitor it. Therefore, we don't want to stir up inflation again, as it's somewhat, it is coming, it has come down, but it's possibility of it ticking back up. So avoid, bringing back inflation higher. So therefore, let's not cut too aggressively or too soon. Now, as the economy looks fine from that point of view, and from the Fed's point of view, and from the GDP numbers, you also have a lot of the big tech companies and the hyperscalers going out and continuing to spend billions and billions of dollars on AI, on CapEx, pushing a lot of these tech companies to all-time highs. The stock price is moving up higher, and Nvidia continues to also melt up higher. Nasdaq and the S&P breaking all-time highs. S&P is close to 7,000. But why does it still feel like, for many consumers, that the economy is not doing well? Why are we still getting also headlines about layoffs also from a lot of these companies as well? Especially with a lot of them posting good earnings. So what's going on? And a lot of this can be attributed to the K-shaped economy, where certain companies are doing better than other ones depending on the industry you're in. For example, real estate, with the high interest rates and the mortgage rates, and with the bond yield still at elevated level, is definitely affecting a lot of the real estate industry out there, the construction companies out there, the companies that rely on selling homes, and the mortgage agents and the realtors and the loan officers who rely on high volume of sales to happen, but not happening exactly, because even with the rate cuts, the mortgage rates continue to be high because the bond yields are still high. Thus, making it harder for consumers to spend their own money, and also starting to taper back, therefore affecting other businesses and other industries. Even though you have Meta and you have Google and Microsoft spending billions and billions and billions of dollars on more AI infrastructure, on CapEx, on data centers, that area just doing hot. Now, if you are in the real estate industry and you're in the business of building data centers, then it's looking good for you, even though you're in that real estate market. Although other commercial real estate businesses may not agree with you, but if you're in the data centers, then sure, because you've got all of these big companies spending money. So it depends where you look at. And when you look at the past GDP numbers, a big component of GDP, almost more than 95%, was big tech CapEx spending. If you take it out, really, GDP is not growing as you would think it would. And you still have, especially with earnings going on, and we had a lot of big tech earnings this week, with them coming out and still committing to CapEx spending and more spending, makes you think that these companies still have money, are pushing money and flowing to other industries and doing better than other industries. It does make you think that what if this all doesn't materialize as expected? There were some worries, especially with Meta, and all the other companies as well, of the idea of are the expenses growing too fast, this capex spending growing too fast at such a fast rate than what the growth is and what the ROI is. What is the true ROI here? Do we really know? We have OpenAI also, right? The maker of ChatGPT coming out promising valuations, saying that they need to raise $1 trillion, saying that, they're going to spend multiple trillions of dollars in order to grow, and they view and value themselves in the $1 trillion area. There's talks about of its IPO maybe releasing soon and the valuation around the $1 trillion area, on hopes and dreams and no revenues or profits yet. There's nothing. There's really no concrete profit in that company. Just mostly promises of potential orders and potential money that could come, and that being circulated back to other companies, where OpenAI says that we're getting this amount of billions of dollars, therefore we're going to commit to Oracle or Nvidia or whoever of this much billions of dollars because we're getting it from someone else. And if we get that, then we'll commit it to you. Therefore, the other companies out there like Oracle and Nvidia mentioning to the shareholders, saying that, hey, we can value ourselves higher because we've got these commitments. But again, what if those commitments don't work? I'm not saying it won't, but there is definitely a risk there. So not everyone's feeling the gains in the economy. Like I said, the K-shaped economy, where certain sectors are doing better than others. And at the same time, the consumers are feeling the pinch because you still got the mortgage yields, the mortgage rates still higher. You have cost of living still higher. The rate that the wages are going up are not going up with the rate of cost of living or the asset price inflation as well. And at the same time, which is making it worse for certain consumers and certain industries and sectors, are the layoffs. The layoffs that, are coming in hot, the layoffs that continue to go on. And we've heard layoffs from multiple companies. Now, the government is in shutdown right now, so we can't really get true details of government data in terms of the hiring. But we did get ADP numbers that showed a 32,000 job loss in the private sector in September. Now, ADP also released that they plan to release this data now on a weekly basis, a prelim number, along with its monthly number as well. But giving more updates, that will be also very interesting to see. Along with this, we also, like I said, a lot of companies out there reported on job cuts and job losses. And I'm going to go through some of them here. So one of them was Amazon, which cut about 14,000 corporate jobs, close to 4% of its workforce, as the online giant ramps up spending in AI, trimming costs elsewhere. So a company like Amazon, seeing the benefits of AI, taking out the workforce, cutting jobs, because it can benefit more from AI and reduce its costs. Again, not all companies will feel that benefit. There are other reasons for layoffs, but this is one of the main reason. One of the reasons is AI is changing things up. And there were rumors that, Amazon might be firing something like 500, 600,000 in the future. We don't know if that's true. I don't want to base any, assumptions on that rumor. But, I want to avoid it actually at all costs, because we tend to overestimate things as humans and tend to cling on to a lot of negative news very quickly. That's what sells more than positivity these days. But going back, Amazon's cutting their 14,000 corporate jobs, expected maybe to do more in the future. We'll see, especially as AI ramping up. And if you think about it logically, it's possible. With AI, with everything that's happening, a lot of these jobs can be replaced. Target also eliminated about 1,800 corporate jobs, or about, which is 8% of its corporate workforce. So you're seeing a theme here of corporate jobs being laid off. The high the high end corporate job market that everyone used to go and get their degrees and go to school just to land those corporate jobs, are feeling the pain of AI because a lot of these tasks can be replaced, which makes you think about, the other jobs, like the blue collar ones, the tasks that depend on your hands, like construction and other plumbing and other labor tasks, may not be affected soon, or not right now, unless humanoid robots do come out and then end up replacing those jobs. We'll wait and see what happens then, if we get to a point where we're that advanced. Maybe, I don't think anytime soon, but maybe, I don't know, 30 years, 40 years, could that be a possibility? Maybe. But you're seeing it already with the power of ChatGPT, with the power of AI, with the power of a lot of these other AI platforms, can take a lot of these jobs, where corporate jobs, taking out lawyers, accountants, analysts, even doctors. And we're seeing it here, just a taste of it from Amazon and Target. UPS also laid off jobs, about 48,000 jobs this year, and says is part of a turnaround efforts which arrive amid a wider shift in the company's shipping outputs. So basically telling you, due to the contraction of their business and that they're feeling, they've got to reduce their costs, and they did it by cutting those jobs. Nestle cutting about 16,000 jobs globally, also reviving its financial performance, feeling some pain in the markets, people buying less than expected, commodity prices moving up due to the tariffs, and the company announced price hikes over the summer, which to offset higher coffee and cocoa costs. Again, higher costs, people are going to, when they get to the grocery store, decide what they will need, if it's mandatory or not, or maybe swap it out with alternatives. Lufthansa Group shed about 4,000 jobs by 2030, pointing to adoption of AI, digitalization, and consolidating work among member airlines. So here's an AI thing. Novo Nordisk, about 9,000 jobs, about 11% of its workforce being shed. They're a company that makes drugs like Ozempic, and the layoffs were wider restructuring as the company works to sell more obesity and diabetes medicine amid the rising competition. So again, economic related issues there. Intel, also trying to revive its business due to the heavy competition with NVIDIA and AMD. So they lost about Intel expected the year end with 75,000 core workers to be laid off. That's down from the 99,500 core worker employees reported the end of last year. So 15% reduction, and again through competition from Intel's other companies like NVIDIA and AMD. Microsoft, in May, Microsoft began laying off 6,000 workers across its workforce. Just months later, the tech giant said it would be cutting 9,000 positions, making biggest round of layoffs seen in more than 2 years. So there's certain divisions like the Xbox video game business that was hit in the layoffs there. Labor reductions also arrive as the company is also spending on AI. So a little bit of both, of certain divisions doing poorly, but also AI playing a big factor there. Procter & Gamble, 7,000 jobs over the next 2 years. 6% of the company's global workforce is expected to be shed as well. And this is again part of restructuring. So you can see in the big pharma area being affected, especially with the higher drug prices and with the Trump administration coming after them, and the economy, right? Let's also not forget about that. The consumers, as sad as this may sound, may have to postpone maybe buying certain drugs if they're in pain, finding alternatives, postponing that surgery or those medical bills, right? That's one part that we've seen in the past when consumers are feeling the pinch. They do reduce their spending in that area. So, though, here's your summary of the layoffs. Now, it's interesting, like I said, and like I started off, the economy is in a K-shaped economy. Certain areas doing better than others. Nothing's breaking, nothing's tanking. It's still plugging along. How long can this last? We don't know. Is there going to be a recession? Is there going to be a crash? You may feel that you might be in a recession. Again, that's that K-shape. And the market could go like this for maybe a year, maybe two. We don't know how long. But eventually, as things settle and as AI plays in, and potentially if things do get better with potential money printing and whatnot, we should see a turnaround there. But the only question is, where does the economy, what does the economy look like? Where is it going in the next 5 years? Are we going to experience this same issue and pain? Are consumers going to feel that for the next 5 years? Or are we going to see a change around? Or are we going to see something worse? Definitely there are signs of the layoffs there. Couple of reasons, the AI and the contraction in certain industries. But we have yet to see more details. We have yet to analyze more details, and I think we should continue to wait and see. I'm not doubting the fact that there are areas in the economy that is not doing good. I'm not doubting the fact that consumers are hurting. I'm not doubting the fact that mortgage rates are high and people are feeling the pinch for some time and people need that break. I'm not doubting that. But we do need to continue to watch this and see, as especially when we get the government shutdown being ended, and when the government comes back, we can see the data and have a little bit more clarity, especially for next year. So anyways, those are just my thoughts. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified next video, and I'll see you guys around. Cheers. Bye.